The best of Money Matters. The Big Story.
Welcome to The Big Story. I'm Hongbin Jeong. U.S. President Donald Trump has unveiled expansive new tariffs and a major escalation of his trade war, referring to the historic move as a declaration of economic independence. In his most ambitious economic policy, he announced a tariff of 10% of all goods coming into the U.S. from anywhere in the world, including Singapore. He also imposed hefty reciprocal tariffs on at least 60 trading partners who he said slapped excessively high duties on American products. That includes China and the European Union, which will be levied new duties of 34% and 20% respectively.
In other words, they charge us, we charge them less, so how can anybody be upset?
But the trade spat doesn't end there. Foreign countries, including longtime U.S. allies, say Trump's tariffs won't go unanswered. So Liberation Day is here, but what will it mean for global trade moving forward? Will we have a tit-for-tat trade war that could quickly spiral out of control? And how will Singapore be impacted? And joining us today to tell us more is Selena Ling, who is a chief economist and head of global markets research and strategy at OCBC. Hi, Selena. Welcome to the show.
Thank you for having me.
Thank you so much for joining us. Now, Selena, President Trump has just announced his most sweeping tariff policy yet. What were your initial thoughts on what Trump has laid out?
Well, everyone has been awaiting this April 2nd Liberation Day tariff announcements. But I would say that some of the numbers that came out were quite punitive. So it is an aggressive escalation in terms of the trade tensions. And I think it will have quite far-reaching implications for global growth and also trade and economic stability. So this broad shift, towards tariffs on basically the U.S. is moving towards protectionism. So I think in the days ahead, we'll start to see who is coming to the table to negotiate with President Trump and who will actually retaliate. So there could be second-round effects that we have to wait for.
Well, these tariffs are being framed as a declaration of economic independence. What does this exactly mean? Is it good or bad?
I think from the U.S. point of view, there is a big push to basically reduce reliance on foreign imports and also to bring manufacturing activities back to the U.S. Of course, how much of this can be achieved in the short term would be interesting to watch. There may be some onshoring of manufacturing activities back to the U.S., but, given the maturity of the U.S. economy, it is quite obvious that not everything would make sense to be reshored back to the U.S. I think near term, we could actually see some disruptions of global supply chains. It could translate into higher costs for consumers. And like I said earlier, it could provoke some retaliatory actions.
I mean, as you mentioned, it seems like it's a good news for the U.S. Trump says some of the tariffs he's imposing could help the government raise over $1 trillion in the next year or so, helping to reduce the national debt and even, potentially offset some income taxes. Is this true? I mean, how much is the U.S. likely to make from the tariffs?
I think given the very broad-based nature and some of the relatively punitive levels of tariffs, it is likely that it could contribute, a fairly significant amount to, the U.S. basically reducing its trade deficit in some way to, of course, funding some of its fiscal expenditures. But I think what is not clear at this moment is who will exactly bear the cost of this additional tariffs. Because at the end of the day, manufacturers will have to decide, do they want to absorb the additional tariffs or do they want to pass on the additional cost to the U.S. consumers? So, of course, if some of it gets passed on to the U.S. consumers, that could mean that inflation in the U.S. could go up, the Federal Reserve would have less room to cut rates, and that, of course, could be slightly negative for the U.S. economy as well. So we have seen market react in the sense that, they're starting to worry a little bit about stagflationary or recessionary fears on the U.S. economy as a result of some of these tariff announcements.
You mentioned some of those market reactions there. Well, what do you make of the short-term market reactions to the U.S. tariff announcement, especially here in Asia?
Well, there's been a slight tilt towards the risk of. The knee-jerk reaction this morning is that, markets in Asia saw basically stock market currencies mainly due to fears of a slowdown in exports and the heightened trade uncertainties. So companies, with huge exposures to U.S. trade or markets may be in a time of slightly choppy trading in the short term. But what is also starting to kind of develop is that the dollar is also coming under a little bit of pressure, mainly because people worry that, these reciprocal tariffs is actually going to be negative for the U.S. economy.
Well, let's also draw some comparisons with history here. I mean, it looks like analysts have drawn comparisons between Trump's tariffs and the Smoot-Hawley Tariff Act of 1930. What lessons can we learn from the historical impact of that policy, and could we see a similar negative impact with Trump's latest move?
Well, if you look at what happened in the 1930s with the Smoot-Hawley tariffs, actually they worsened the Great Depression. They triggered a global trade war, demand collapse, and if history really repeats itself, then you could actually see Trump's latest round of tariffs basically dampening global trade, disrupting supply chains, and potentially push some economies towards recession.
Well, also taking a look at Trump's tariffs, or current Trump's tariffs here, China has been signaled out as the biggest target, facing a massive tariff hike to 54%. Now, this includes a new 34% tariff on top of the existing 20%, justified by claims that Beijing hasn't done enough to combat fentanyl trafficking. How big of a blow is this on Beijing, Selena?
Well, I think it's going to be quite a severe hit to China. China is already facing with many domestic challenges, including its property market, for instance. So in the short term, I think this would actually potentially narrow Chinese exports to the U.S. quite significantly. It could also accelerate the shift of Chinese manufacturing to other countries. Going forward, the question, of course, is whether China will re-engage more actively in trade talks with the U.S., and what could be the potential outcome from these negotiations. But I think for China's case, we have taken down Chinese growth forecast for this year slightly from 4.8% originally to about 4.6%. But, the situation is really very much still fluid. So the question is whether it's going to be tit-for-tat or whether there's room for negotiation and whether this huge tariff rate can actually come down from here.
Well, Trump has linked the tariff hike to fentanyl, but is this really about trade, or is it just another, front in the ongoing U.S.-China rivalry?
Well, we know that U.S.-China strategic rivalry continues to persist. I would estimate that maybe roughly about 20% of this year's 54% tariff that's imposed on China can actually be attributed to the fentanyl-related concerns. So there is potential room for negotiations, right? But, going forward, even if negotiations go well and some of this 20% is taken off from the tariffs, generally China is still a primary target in the current round of tariff measures. So this jostling, for geopolitical and economic dominance, we suspect is probably here to stay.
Well, China isn't just a target, since it's also a major trading hub for the rest of Asia. And if China's economy slows down due to these tariffs, the impact could, spill over into the region. So if China does retaliate, then do you think this will, send a ripple effect to the rest of Asia or the region? I mean, could we see a domino effect?
I think the domino effect to a certain extent is already happening, because you're already starting to see, 49% tariffs on Cambodia and 48% on Laos. But more importantly, for major trading partners, you're talking about Thailand, Indonesia, Malaysia, anywhere between 20 plus to 37%. It is quite substantial. So if ASEAN trade is impacted, and we do think that there will be quite a bit of downward pressure on the growth prospects. We have, for instance, cut Vietnam's 2025 GDP growth by quite a sharp 1.2 percentage points to 5%. And for the rest of the region, for our ASEAN neighbours, we're looking at anywhere between 0.2 percentage points to 0.8 percentage points for Thailand. So it will be quite pronounced in terms of the economic impact on ASEAN. And this is not, even completely factoring in the volatility that we are seeing in the financial markets and the tilt towards risk-off sentiment. And of course, consumer and business confidence will take a little bit of a hit in the near term as well.
Right. Well, I also want to talk about Singapore here, Selena. I mean, despite being a close ally and free trade agreement partner, Singapore is also subject to these new tariffs. Did this come as a surprise to you? Why do you think the U.S. targeted Singapore?
Well, I think U.S. President Trump basically meant it when he says that there will be little to no exemptions. So it's a very, universal tax tariff in that sense. I think for Singapore's case, I earlier basically said, well, never say never. We saw what happened with Mexico and Canada. I mean, you can look at the glass half full. I mean, 10% is relatively mild compared to, some of the more staggering numbers out there for the rest of the world, in particular China and some parts of ASEAN. And I suppose the other silver lining really is that apart from these reciprocal tariffs, there are no specific sectoral tariffs that are being placed on like semiconductors or pharmaceuticals, which, as we know, Singapore is also quite dominant in. Of course, we can't tell whether this will come at a later stage, but at least for now, I suppose these are some of the silver linings for Singapore.
It looks like Deputy Prime Minister Hongbin Jeong has said that Singapore is disappointed by tariffs imposed by U.S. President Trump and will engage with the U.S. to clarify tariff calculations. So given this, how will Singapore navigate the global economic challenges presented by these tariffs? Can Singapore survive the 10% tariffs?
I think 10% tariffs are not a do-or-die situation per se. I mean, if you think about it, Singapore is a very high cost but also very high value-add manufacturing center. So the products, I think, will probably still be in demand, but we are a little bit cognizant of the potential downside risk for the global and regional economies in general, especially for China. Right? I mean, if you look at the NODX share in 2024, the US and China and Mexico and Malaysia, they are the top 3 trading partners for Singapore. So anything that affects trade and growth prospects for, some of these countries obviously could be detrimental to the Singapore economy. But I suppose the good thing about Singapore is that we are quite resilient. We have always focused on trade diversification. If we continue to strengthen partnerships with ASEAN and the rest of the world, and we try to, mitigate some of the direct impact through policy adjustments, for instance, whether it's adjusting monetary policy further, or if need be, having a more expansive fiscal policy. I think that the policy tools are basically available, if things really go downhill from here.
Looks like that's some good news for Singapore. But what does this mean for our free trade agreement with the U.S. then? Will Singapore retaliate?
Well, I think this move, does raise some questions about how watertight our U.S.-Singapore FTA is. I think Singapore is very likely to retaliate directly. Probably it will seek to, have diplomatic negotiations or try to, seek some exemptions. And in the meantime, basically try and build resilience by basically reinforcing trade ties with other partners. So I think what is likely to happen in the medium term is that most economies will try their best to reduce some reliance on the U.S. market.
Well, Selena, before we let you go, any other surprises that caught your eye during this Liberation Day announcement? I mean, what else will you also be tracking in the coming days?
Well, I think the main thing is that this is probably not the end of the road for tariffs. We still have to be watching for whether there's going to be negotiations that will bring tariff levels lower from what has been announced, or is there going to be retaliation and its potential for further escalation? The other thing which I highlighted was, what he spoke about, which is sectoral tariffs. Tariffs on semiconductors, tariffs on automobiles, tariffs on pharmaceuticals, etc., which may actually be significant add-ons to the current reciprocal tariffs. But on the data front, we are waiting for the U.S. services ISM number and also the non-farm payrolls numbers that's coming out tomorrow. I think those will give us some clues as to, the health of the U.S. economy, and that may also kind of like weigh in on, the overall general direction of the U.S. economy.
Well, it looks like Trump's tariffs will continue to top headlines as the week goes by. Well, thank you so much, Selena, for joining us today.
Thank you.
Thank you. That was Selena Ling, who's the Chief Economist and Head of Global Markets Research and Strategy at OCBC. This has been The Big Story with me, Hongbin Jeong.
To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.